Joining me now is Jason Barnard. He is the president and CEO at Foremost Clean Energy. Good to see you again.
Nice to see you, Mark.
Now, Jason, it was a few months ago, I guess it was, we were in the Red Cloud studio with David Cates of Denison, the CEO. You, of course, have this earn-in agreement, $6.5 billion drilling program across 10 properties. And clearly there are advantages to being hooked up, so to speak, with Denison. So can you remind everybody about that arrangement?
Yes, transformational deal, 10 properties, drill-ready, discovery-ready properties, and a strategic collaboration and partnership. Denison has the data, and it's world-class data, and we've hit the ground running, hitting on our inaugural drill program at Hatchet. We did a 600-meter step out. We hit uranium mineralization, and it's classic Athabasca style in the alteration mineralization. And we've proved that that strategic partnership works, because that's a good thing to be hitting on your first drill program. Companies don't do that. And the headline grades, 0.1, 0.2%, upwards of 0.58%. That is fantastic, because we will go back into Hatchet. It's just amazing on a 600-meter step out that we hit, and it proves that this strategic partnership is working with their world-class data. Denison is helping. We're picking targets, and we're nailing it on the first try.
Right. So new discovery at Hatchet Lake, as you said. You're planning phase 2 drilling. Company's also drilling at Murphy Lake South. So what are the goals of that program and the subsequent program at Hatchet Lake, and some of the highlights? You alluded to some of the highlights already, hitting that first strike. Yeah,
so we hit the 600-meter step out. We proved in the past there's been up to 2% at Richardson. We hit at the tuning fork with the step out. There had never been drilling there. Now we've recently come out with assays that elevated our grades, showing and giving us even more information for our next set of drills. Now, you talked about Murphy. Murphy, we hope to duplicate it. So that would be almost unheard of, but it wouldn't surprise me with our collaboration with Denison to go and do the same hit mineralization at Murphy. And then we'd have two different provinces of mineralization. Then go back right after drilling Murphy. Of course, we'll wait for results. But back to Hatchet Lake to go and search for those larger intersections and higher grades that we would look for in our second drill program, heading towards that real new discovery that Denison would like to see us deliver to them at some point, collaborating and being their partner.
Right. Now, while all that's going on, you're also drilling in Manitoba. You've got a team there, the Jean Lake Gold-Lithium Project, and Foremost has experience with lithium. That's where you started with this company. So elaborate on that strategy and the fact that you'd like to have Jean Lake eventually financially support the uranium side of the business.
Yeah, so it's all about being leveraged to uranium right now. Uranium is a hot commodity with the Trump administration, everything going on there, AI, the data centers, the need for nuclear power, and the Trump administration pushing for just that. It's all about the uranium. But with lithium, there's also a push because of the China, critical minerals situation to onshore critical minerals. So the Trump administration turned around, gave LAC Minerals $2.4 billion loan to go and get that mine into production. And lithium has caught a bid. Lithium's back. Now, it just so happens, yes, we have a lithium reserve in Manitoba. We're an asset-rich company. We made a decision to go back there because on our lithium property, Jean Lake, we hit 1.25% lithium, but we hit 7.5 grams per ton gold over 7.6 meters. That's essentially a discovery. What you want to do is you want to step out and see if you can further find the system. So in the essence of creating shareholder value, which we're always wanting to do, I'm a large shareholder, Denison's a large shareholder. Yes, we're going to go back and hit that asset and increase the value of it and see what's there. Gold and lithium, that's quite a combination, but there's a lot of gold in Snow Lake, Manitoba, in the area. So yes, it's all about creating value, and we hope to bring it home.
Can you flesh out your comments about the uranium sector in general? U.S. government support. We saw that deal for reactors with Brookfield and Cameco just a while ago. The AI data center boom. Some say it's a bubble. We'll see how long it goes. But also this ongoing supply deficit with uranium. A lot of those tailwinds continue. Correct?
Yeah. There's it's the supply side that's the problem. You know, there's different mines in the world they expect good production from, and they're all bringing down their expectations of what they can deliver. But the demand, it's going the other way. So there's already, you know, a supply deficit. Uranium starting to tick up again, and that's even before some of these small nuclear reactors hit the market. So it's the demand is there, and it's going to continue. It's the supply side that we're concerned about, and that's what Foremost and Denison, you were supposed to deliver future production, but there's just, you know, no getting around it. Long-term contracts show it, and uranium commodity is the place to be, and we'll be focused there. And I think it's only going to get better for the uranium commodity.
And lastly, Jason, the investors have clearly discovered the stock. Last I looked, Foremost Clean Energy was up about 400% in just the last year, since late April, actually. And so you're on the CSE, you're also on the NASDAQ, most of the volume's on the NASDAQ. So to what do you attribute this burst of interest in the stock, and what kind of feedback are you getting from investors?
Well, I'm getting great feedback.
Yeah.
And one of the things about Foremost is you can't just watch our CSE symbol, FAT. You have to watch FMST, our NASDAQ symbol that trades about 10 times the volume. So wherever that's heading, it will just, you know, move the Canadian market along with it. And to that, we sometimes trade $1-2 million a day. So we've got the attention. We're part of the AI adjacent trade. There's not many places to go and buy. Of course, Denison trades sometimes over 100 million shares a day. Is doing great. We have been found as a way to go play uranium, leverage to uranium. We've had some success, and the retail investor, that market's 10 times the size, and the big board is where they want to go buy it. It opens up a lot of demand for our stock, and yes, it's been a good year, and they bought us up, and you know it's volatile, so they'll, you know, it can go both ways. But in a higher high, higher lows, upward trending market, you want to be exposed to a uranium exploration company that has de-risked itself because of its large partners, and we're fully financed. We've got all the capital we need to go drill all of our programs. But you want to be exposed to that U.S. market because they take you up and take you up fast. So you can buy on dips, unlike some smaller companies. Sometimes you go to buy on the dip, and that's it. You're not getting the pushback.
Right.
Pushback up, that is. So the NASDAQ is a place to be. And yes, they found us, and I think we'll have continued success. I hear nothing but great things.
All right, good stuff, Jason. Great to see you.
Yeah, great to see you. Thanks.
We'll be following, as always, Jason Barnard. He is the president and CEO at Foremost Clean Energy.